Welcome to another episode of Trade by Numbers. I hope you had a great day out there trading. I know we had a lot going on out in the market today. We had the CPI numbers come out. We're going to break it all down. We're going to talk about it. If the market didn't react the way you was expecting it to today, you are not alone. We're going to talk about it. We're going to make sense of it so that you can make money moving forward. Now, if you're brand new to the channel, my name's Josiah. I trade stocks and cryptocurrencies for a living, and I'm here to help you be able to take your game to the next level. So do me a favor, hit that subscribe button. You don't want to miss any of my videos, so hit that notification bell. And I put a lot of work into these, and I'm here to help you make money. So do me a favor, hit that thumbs up. Now, let's talk about it. We had the CPI numbers come out this morning, and they were better than I think pretty much anybody was expecting. We were expecting 5.2, we got 5. Last month was 6%, so we was at 5 this month. That means a full 1% decrease in inflation. And looking at the itemized numbers, I'll be honest, it was better than any chart that I've looked at on inflation in probably the last year. That's my opinion. So why did the market not really react that great? We have seen this market run up 2+% by just meeting expectations, and yet we beat by 0.2%, and the market went green, but it really didn't run up that high, and then come crashing down and actually ended up closing in the red. In fact, we got the SPY down 0.41%, Dow down 0.11%, and the NASDAQ down 0.85% on the day. So overall, the market really ended up closing badly. Why? Well, part of that was the release of the FOMC minutes. Now, I said this morning, don't sleep on those minutes. They were coming out at 2:30. I said I was going to be watching that because I believed that there was going to be something in there. I was looking for a bombshell, and we got that. And that's what the market reacted so poorly to. So the CPI numbers come out. That was good. However, everybody was waiting to see if that other shoe would drop. And that's what happened. We had the FOMC minutes come out. And, just kind of break it down a little bit. There was a lot of talk about a recession coming up. There was a lot of talk about banking stress. And the most important thing that I took away from it was the talk about how much harder it's going to be for lending, especially when you're talking about, I've been calling for the NASDAQ to fall in particular. Why? Big tech. Big tech requires a lot of money. It requires a lot of loans and stuff to be able to keep operations running, especially through down times in the economy. Now, if you go making that money not only more expensive to get, but also harder to get, that makes it really tough on a lot of these companies, which is why you're seeing the NASDAQ selling off as much as it has. Even in kind of this little micro bull run we've been having, if you look at the NASDAQ on the last couple of weeks, look at it on the weekly time frame, you can see the last 2 weeks we've been in the red and falling off. This is actually quite a bullish chart that I'm looking at when I look at the NASDAQ on the weekly time frame. So what does this mean for the market? What does this mean for where we're going? Well, I'll be honest, again, it's kind of in the air. We have the PPI numbers coming out in the morning. I think that's going to help clarify some things a little bit. However, if people are really starting to get the idea that this recession is going to take hold, the past few months we've been talking about recession on this channel. We know a recession's coming, and yet every time something happens, CPI numbers come in and they're meeting expectations. We've seen this market run up. We've seen it run up. But have we finally reached the top of where this is going to run with the recession hanging over our heads? I've been calling for this market to pull back. So I guess we're going to see, let time tell if I'm right on this or not. But could this be the top? Could we have hit that top right now of where this market's going, and could we start seeing that retracement? Like I said, we've got some good numbers out. Could the Fed start to pivot and push us into that bull run? Absolutely possible. However, with the recession in front of us, with all the other things going on out there in the economy, is that going to put enough fear in the market that even if the Fed starts to pivot, as long as this money's hard to get a hold of, especially for big tech and startup companies and things like that, once you get out of like the Dow or even the S&P, when you look at the NASDAQ, you look at some of these startup companies, this is going to be really hard on them. And that's what I want to focus on, because this is not bad news. We just have to know how to run with it. Is a recession a terrible thing? Absolutely. I don't want to see anyone out there losing their jobs. But that's the very reason I come on here. I make these videos so that you can learn how to become financially free and not be dependent on a job. If we know that this is coming, we can set ourselves up to make money. And that's exactly what we did today. Kind of getting to our plays of the day. I did sell my Alibaba today. You know, we bought those. We bought the 99 strike. It ran up on us a little bit, come back down. I said I was calling for it to get down to around that $94 level. We got there today, and it sold absolutely amazing. We picked those up at $380 a contract, sold those at $630 a contract. That represented a 63.1% gain on that trade. Super happy with that. Now, where do I see the market going tomorrow? Well, until we get those PPI numbers in the morning, I don't know. What I do know is we did have the market close in the red. We could get a little bit of a bounce. Just to kind of hedge against that, I did sell off part of my positions of the TQQ puts that I've been buying. Now, just took a little profit off the table. That way, if we get a bounce tomorrow, then I can go ahead and pick up some more, and I already locked in that profit. I was able to sell some of those that I had. Made about 15% profit margin on those. I had some at $290 a contract, sold them at $330. So a little bit of money there, locked in a little bit of profit. If we get a bounce, then great. I can pick them up again and run it back up. If we don't get a bounce, well, I'm still holding some of that position, so I'm not going to kick myself too much. Overall, that's what I'm watching. We got out of our Alibaba, so at this point in time, we are just sitting here playing the cues, seeing where this market's going, and we're going to make some money doing so. So make sure you're subscribed to the channel, follow along so that you can make money off this as well. Check it all out, see if it makes sense for you. Till next time, that's what I got for you. Be blessed, and remember, never trade with your emotions, always trade by the numbers.